Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, a busy couple of days with Vancouver and Toronto Realtors both releasing their view of March sales. Mike in Scarborough, Ontario asks, can Ross explain how house price illusion works and how Toronto Realtors profit from it? Well, I think they all profit from them, don't they?
Well, the Realtors profit from it. Yeah, they profit from it the most. People have no idea how much Realtors actually profit from it, Jim. Imagine the average Canadian goes through 4 homes in their lifetime. Each time they use a realtor gets 5% of the cut every time you move. The money's financed. It's a staggering amount of money. We always tell people I told this to my clients for, decades. Remember, the last dollar you ever pay off is a commission dollar that I get. So make sure that you're getting value for your commission dollars. That's why you should hire me. Most realtors, of course, that's totally the opposite. So yeah, Mike's right. You're right, Jim. You've got the releases going across, and you got silence from all the bodies that oversee these groups, and CMHC is silent, StatsCan is silent, governments are silent. All this silence out there as these real estate boards are once again out there talking propaganda designed to make their members commissions. So Mike in Scarborough, how does house price illusion work? If you go back to these shows that we've had here on House Street starting about last May, you'll hear that I've repeatedly warned that this is a singular opportunity for the layperson to be able to see how organized real estate is structured and how the Canadian public is manipulated by realtors now since Greg Klump was hired in 1992. So here's how it goes. Today you heard in Toronto and you read in newspapers as well, the average price increased $50,000 between February and March. This was a headline at the major newspaper in the Greater Toronto Area, the Toronto Star. This is their headline. If you went to BNN, you would have saw Toronto Real Estate Board being quoted once again. Every place that you go, the Toronto Real Estate Board is being quoted. Now, this is how absurd what these statements are, and this is how house price illusion works, Mike. The average price in March of 2021 and the average price in February of 2021, it went from $1.045 million in February to $1.097 million in March, an increase of basically $52,000, which is where the headline appears. The headline tomorrow becomes believed by the public. Your local realtors across the nation all say, oh yeah, this is true, this is true. The average price went up. The average house went up $52,000 in the last 31 days. Interesting. So let's take just a grade 1 look at the data, okay? Let's look at detached homes. Certainly, if the average house increased $52,000, detached homes must have went up a lot more than that, right? So let's look at detached homes. Detached homes in that real estate board went from $1,371,000 to $1,402,000. Oops, single detached didn't go up by $52,000. Oh, by the way, folks, 50% of the homes, 48.4% of the homes that were sold in March were single detached homes. So that half didn't increase the $52,000 you read in the news headline. Let's look at semi-detached homes. After all, 10% of the houses that were sold last month were semi-detached. Did they go up 52,000? Well, there were 1,050,000 in February. There were 1,045,000 in March. Oh my word! Those ones actually dropped in price. So now we have 60% of the homes that were sold for less than the $52,000 gain. They told you that the average house increased. It gets better. Let's drop it down to another category, a category called freehold townhomes. These are the townhomes where there's no condo fee. It's where you can look down the street, one garage door is pink, the next one's turquoise. One roof is 40 years old and gray, the other roof is brand new with 40-year shingles and brown. This is the type of townhome we're talking about, because this is one of the warning factors everybody should always be informed about when buying a freehold townhouse, and why you should be focused on higher-priced freehold townhouses. Leave that for another day. That category of home, 10% of the homes that sold in March were freehold townhomes. Well, guess what, folks? In February, those averaged $941,000, and in March, they averaged $951,000. Oh, that was only a $10,000. The last category was a drop in price. This category was $10,000 increase, and the single detached, which represents 50% of the sales, it didn't even increase 3/5 of what they're saying the prices increased. So now we're at 70% of the homes that sold didn't increase $51,000. Let's go to the next category, condo townhouses. These are townhouses that have a condo fee, okay? So these are a little safer to buy, but you pay for that premium because you have to pay for a condo fee, and that means when the garage door needs to be repainted, everybody's garage door gets repainted with the same paint, the same color, on the same day. Well, those houses went from $744,000 in February to $765,000. Well, that's only a $20,000 gain. We're now up to it's a staggering amount of sales. We're now at 75% of all the homes that have sold didn't record a $52,000 increase. Well, let's look at the last category, condo apartments, high-rise apartments that have a condo fee, because 25% of the homes that were purchased in March were condo townhouses in the Toronto Real Estate Board's, with the Toronto Real Estate Board members. Well, those houses went from $642,000 to $676,000, or a $34,000 gain. 99% of all the homes, each of the 5 main categories of homes that are out there, not one of them even got close to a $50,000 increase. But magically, the average increased $50,000. You see, folks, this is how house price illusion works. This happens as we said in the show, hundreds of times, maybe not hundreds, but dozens and dozens. Every single month, this is what happens. The stats always go towards the houses where you can record the greatest, through the methodology that you can create the greatest average price gain. We just went through how 99% of the homes, 5 distinct categories of homes, not one of those categories increased 3/5 of the amount, or they didn't even increase 60% of the $50,000 that the Toronto Real Estate Board claimed the average price went up. Now, within each of those categories, I can go in and dissect each of those categories for even lower house price gain. So I can take the 50% that's sold in the single detached, and I can show you how the average price went up $30,000 between February and March, simply by counting different homes. You're not measuring the same thing month after month after month after year after year after decade after decade. You're continually measuring something different each month. I just explained to you how 99% of the homes in 5 distinct categories did not increase $50,000, not one of them. One lost money, one broke even, and the other 2 had a little tiny change. But the real estate board has just convinced everybody the prices went up $50,000. They convinced the entire press that this happened. The press published it. Every single bank economist who's out there believes this. I'm just showing you can pull these charts up yourselves. They're on their website. This is not a complicated issue to go through right now. Normally, it's very, very complicated. You have to be able to understand how to read categories of homes, price classes of homes, where you are in the trading cycle. But I can tell you the reason why our $10,000 prize has never been claimed is because you can't prove a house changes in value in 31 days or 60 days or 90 days. You can't prove it. What you can prove is how House Price Solution works. And we just described how 5 categories representing 99% of the homes sold on the Toronto Real Estate Board, not one of them had their average price increase by up to $50,000. You actually have categories, full categories, that dropped in price. But here you have the Toronto Real Estate Board claiming the average home increased $50,000. What I'll tell you is, Mike, is this. Next month, when the realtor's knocking on the door to get a listing, he's going to tell the seller, hey, prices are up $50,000. We can get an extra $50,000 for your house. Let's list it at that. That's the scam, how it works. Today's realtor is so low on the education level on how housing markets function and how MLS stats work that you're not going to read this anywhere else in Canada. I'm telling you, you can go to the Toronto Real Estate Board's website right now, download the Market Watch report from March of 2021, February of 2021. Look at the 2 charts. They break it down into detached, semi-detached, freehold townhouses, which they call alt attached row townhouse, condo townhouse, condo apartment. And you can look at the numbers, and they're sitting right there staring you. 5 categories. Not one of the 5 categories increased over $30,000. One of the categories actually lost money in the same month. No other category jumped $20,000. But the Toronto Real Estate Board is telling you 99% increased $50,000. There is no one out there to represent you, Mike. There is no one out there that will guarantee that you can buy your home for the lowest price possible. That's why the Wealthy Homeowner was created. Nonsense like this. This is why I had to give up my use of the realtor trademark. And the minute I gave up my use of the realtor trademark meant I no longer could get ethical access to an MLS system. So we moved out to help you, the home buyer.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ross Kay. Ross, yesterday, Vancouver Realtors announced the benchmark price for detached homes hit a new record all-time high. Carrie in Vancouver asked us, homes on our street are not selling at prices above their 2016 high. How are local realtors claiming new records are being set for homes like ours, which is a detached home?
Well, Carrie was the name, Jim? Carrie?
Carrie.
Yeah, so thanks, Gary. I mean, you're seeing in real time the greatest financial con in history. You're seeing it in real time on your own street. Look, it is absurd to be stating the same home in the spring of 2016 would not be selling for more money than the same home, the identical home this year. The data does not support that at all. Yet the benchmark price for the composite, I think, is up 3% supposedly in the last 3 years. Prices now are over that the benchmark price is now over. How does it work? The reason why we fought against the benchmark price was for this specific reason, because it has nothing to do with house prices. Now, you don't have to take my word for it. You can just look at the design of the benchmark itself. The Canadian Real Estate Association was not stupid enough to say we're going to compare same home or use a repeat sales methodology or a head-on house price model that like the Teranet National Bank is or the Case-Shiller is down in the States. No, we're not going to do that. We're going to come up with a new methodology. The new methodology is this. We're going to look at bedrooms. We're going to look at bathrooms. We're going to look at kitchens. We're going to look at carpets. We're going to look at features. And we're going to set a standard home in an area. And what we're going to do is we're going to apply the change in bathrooms that is taking place in your community against the bathroom as if that change took place in a standard house. This is the complication of this methodology. Long story short is, anybody who knew what was going on at the time knew that the reason for the benchmark price was to hide commission gains from being easily calculated by the Canadian public. Okay, when house prices go up, there's always downward price pressure on commissions. I mean, it only makes sense if you're looking to get an extra $2,000 next year for doing the exact same work you were doing this year, but your costs didn't go up. Sooner or later, the public's going to get smart to this, and they're going to say, "Wait a second, we can't do this. You're charging too much money. We want you to reduce your commission rate." So they came up with the benchmark price methodology. You'll notice I can say this because I can prove it. That means what I'm saying, the Canadian Real Estate Association can't come back at me because I have the proof. So they came up with this complicated methodology. Okay, well, this complicated methodology simply to foster a false narrative. Why does the Canadian MLS average benchmark equal the average sale price from 2005 till today? The exact same amount of change. Now, there is a few months delay, and that delay varies from what part of the year you're looking at the benchmark in, but that's only a function of the sales volume differential that takes place from month to month. In months where the differential is small, well, then the latency is small. Where the differential is big, then the latency is big. But over time, it always catches up to the average price, because all it's doing is it's measuring how expensive of a bathroom the average home buyer is buying. If the average home buyer is wealthy and they look and see gold taps, they buy a house with gold taps. If they are wealthy and they want a brand new kitchen, they only buy a house that has a brand new kitchen. They reject all the other ones. That's how the benchmark price is designed to work. It's why it simply mirrors the average purchase price, which has been reframed as the average selling price by Greg Klump between his early days of employment and to when he retired last year. You're seeing in real time, Kerry, in real time, you can see the identical house is selling for less money, but the local realtors in Vancouver are telling you prices are up. You're seeing it in real time. You can find outliers. Hey, don't get me wrong. There's always outliers. Well, I can promise you that outlier has had quality upgrades, or the buyer's rep who was working with the buyer was too ignorant to what was going on and allowed the poor innocent buyer to overpay for a home. That's how benchmark price works. You're seeing it in real time, and that's why everything you read about the Vancouver real estate market on Monday was a con, a fraud, a total misrepresentation of facts.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a question from Stan in Cambridge. Prices here in Cambridge are going through the roof. How can the government help reduce rising house prices for new home buyers without hurting existing homeowners in the process?
Okay, so this is a good question, Stan, and it's got two sides to an answer. Number one, existing homeowners are only hurt from falling house prices when they divest of the real estate. Now, whether that is a full divestiture, i.e. selling the family home and moving into a retirement community, a rental retirement, or it's partially divesting, trading down in the market. You're going to trade down from a big 4-bedroom, 2-story into a nice bungalow, a townhouse, usually a higher quality bungalow townhouse in the example that I'm using here. So it's only when you finally divest. Most divestiture stand takes place when people die. So it's really the kids that are the ones that deal with it. That said, how do you correct house prices and expose the fraud that's been ongoing now for 25 years? Quit funding commissions in a mortgage. Why is the average buyer in the Toronto Real Estate Board spent over $1 million? I'm not saying the house was worth $1 million. I'm saying the average home buyer spent over $1 million in March. That means the commissions are about $50,000. Now, nobody has $50,000 in the bank to give to a realtor for 24 hours work. No rational Canadian family would give over one full year of median income, after-tax income in this country, to a realtor for 24 hours work. Nobody would do that. Well, they don't have to do that because it's funded in the mortgage. If CMHC simply stood back and tomorrow said, we will no longer fund commissions being included in a purchase price, that's all that they have to do. The beautiful thing about this is immediately, instantaneously, in 30 days, you have a 5% reduction in purchase price because commissions are no longer included in the purchase price. If commissions are going to be paid, the buyer is going to have to write a check and pay for them. Because that 5% is no longer being included in the average purchase price, prices drop 5%. Canadians aren't stupid. They're only misled by realtors. So if CMHC said, we are no longer going to allow you to include the commissions in your mortgage, that would mean immediately you would see a 5% reduction in the appraised value of every home sold in Canada. Immediately, overnight, in 30 days it would be done. And that would set off a series of events that would correct the affordability issue because it gets passed on longer and longer. You would have a whole series of buyers, first-time buyers, who could not enter the market. They would have to wait probably for another year before they could enter the market, save enough money to pay the realtor's commissions. Okay? So that means you cut out first-time buyers from the market. But you don't cut them out the way that CMHC did. You cut them out blanket. That means the housing market sales immediately are halted. The sales immediately begin to slow, and within 4 months, sales are at a new level, a new lower level, which even adds more to the affordability function of a housing market. In other words, when we're talking affordability, we're speaking strictly in terms of a purchase price, average price, house price illusion, the illusion that organized real estate is built to capitalize on. Now, you're never going to hear anyone in Canada outside of my firm recommend that CMHC quits insuring mortgages that include commission. And this is why. A $1 million purchase, and actually, let's remember, folks, the over $1 million average price supposedly in Toronto, in the Greater Toronto area this month, that is a non-CMHC insurable loan. You cannot get insurance on this. Even with 20% down, you cannot get insurance on this loan. You have to go outside of the CMHC funding model. CMHC says overnight, they said, okay, you're not going to include the commissions. Think about what that does to organized real estate. There are literally over 50% of all realtors don't even sell a house in a year. They don't average one home sold in a year. You have brokers on national media outlets, real estate agents on newscasts who don't have a single listing talking as if they know things about a housing market. Those people are all gone overnight because no consumer is going to be foolish enough to pay them $50,000 cash. This is the truth about a housing market. It's very simple to deal with these things, but you have to step back and look at the model, look at how the system works, look how home buyers trade homes, how homeowners trade homes, and you have to simply reinvent the wheel. And this is how you reinvent it. CMHC is no longer going to insure mortgages that include commissions. We want all of the appraisers to remove the commission from the appraised value of the home. Boom. You just heard the bottom fall out of the market. You just found a way to improve affordability in 30 days. 4 months from now, the affordability will even be better because house prices would be even lower. And the only group to be hurt by this is the Canadian Real Estate Association and anyone who claims to be a realtor, because about 97% of realtors today could not sit down with a Canadian family and justify their service level so that the Canadian family believes they're worth $50,000. The only way that it happens is because commissions are financed in a mortgage. CMHC needs to divorce itself from the Canadian Real Estate Association. It needs to remove all references from Korea, MLS, Realtor from its websites and start representing the public. And the first step to doing that is stop allowing Canadian families to fund commission fees over a 25-year financing model. You can't buy a used car in Canada, a brand new car in Canada, and have a 25-year funding model. You can't borrow credit card debt in this country on a 25-year funding model. I don't believe there's any other service in this country that you can fund with a 25-year repayment model except for real estate commissions. I wonder what the average house price increased compound annual growth rate over the last 30 years. I wonder.
Ross, another listener question, this one from Jessica. Hi, Jim and Ross. I wonder if Ross would be willing to chat more about the service provided by the wealthy homeowner. For those accepted as clients, what does the $19 a month and the $1,999 buyer-seller program include? Well, there's a lot of information on the website, being the only program of its kind in Canada. I'm hoping Ross would be able to give the listeners a general rundown on how his program works and what a client can expect. Thanks for your time, Jessica.
I guess this is the first time we've ever been asked, or you've ever posed this question to me, Jim, since I've been coming on the show. I mean,
I asked originally.
Yeah, but I mean, years ago, I'm not being critical, right? I'm happy that the question doesn't come up. I'm not here to sell the platform, and I'm not here to sell the service of an advisor. I'm here just to get everybody to try to start thinking. So, Jessica, first of all, almost no one, as far as I know, no one pays $19 a month, because that would be if you only wanted to pay month by month. So the $19 a month is really the highest price that you could pay, and most people, this is how it works. They're in the program, they're in the Wealthy Homeowner with a regular DIY dashboard for 3 to 4 months. They decide whether or not they want to still be in the service. If they want to stay in the service on a DIY, they get an offer for an annual subscription, which drops at $12 a month. Okay, that would be the maximum that they would have to pay. There is a percentage of people who leave the service after 3 months. They don't find the service is of value to them. The reason we have the program set up the way that it works, and I appreciate that you commented about being accepted, because currently we reject about 48% of all applications that we get. We're probably still getting about 10% from realtors every month, and the ones that we can sort out, we always reject. But there's about 48% of the applications are rejected. The reason for that is we don't want to be dealing with people who don't have the same viewpoint that an advisor is going to provide them advice on. So we do everything we can to weed you out from the system before you get in it. Now, once you're in it, you really, in my personal opinion, you should be in a program. And I'll discuss the buyer's program right now, because that's the easiest, and that's the most popular program that we have ever launched. Well, first of all, you get a 5 times guarantee starting 2021. January 1st, we launched that. So you're going to save $10,000. You will be provided a strategy that will save you a minimum $10,000, or your program fee is refunded. So there's no risk. Okay, there's no risk. You will be provided a unique strategy that you can't get anywhere else that will show you how to save $10,000. Now, I will tell you, most people save hundreds of thousands of dollars. They build hundreds of thousands of dollars of wealth that they wouldn't have built if they hadn't entered the program. Our current record holder is $1.2 million, a North Vancouver ultra-luxury class buyer who in the fall of 2015 was told not to buy. Panicked all through the end of 2015, panicked in the spring of 2016, and then all of a sudden in the summer of 2016 started to say thank you. And they've been saying thank you as their wealth grows and grows and grows, now at $1.2 million. And I'll bet it's closer to $1.7 billion, or $1.7 million that they were able to access if they used all the strategies that we would provide them. The programs are not DIY. They're actively monitored by the platform itself, the advisors. Each buyer in this country is unique. It's not the way that organized real estate sells you, okay? Every single buyer is unique. How old are you? Okay, well, are you 60? Well, are you 60 and in okay health? You probably have another 20 years of ownership. Okay, so for you, each year you lose is 5%. You lose 5% of your life of not being a homeowner, of the remaining life. It matters. Now, if you're 30, you've probably got another 60 years. You see, we have to build in life expectancy models in our strategies. Nobody thinks about that, but we do. We had, in that perspective, only comes from working with thousands of clients over decades and seeing how the average age of your client increases, and then going and checking the health data that supports that. The average age of a home buyer over my career, the average life of a home buyer over my career increased 7 years. 7 years. This is why all those boom-bust echo books were wrong. They didn't build in for a longer lifespan. And it's not only a longer lifespan that you have to build in for, it's the quality of life you're able to live. You know, I've talked in the show about my dad. My dad is 84. He is a single detached homeowner, just bought a brand new single detached home. He has just finished the basement himself because he told the builder he didn't want the basement finished. And in the next week, he's going outside and building a 12 by 20 foot deck. His dad had already passed by this time, okay? You have to plan for these changes in your longevity. This is the uniqueness of the program. What city are you looking to buy in? What neighborhoods are you looking to buy in? What schools are you looking to have your kids attend? Do you have kids? Are you planning on having kids? Are your kids going into high school? What category of home are you looking? Do you want a backyard? Do you want a balcony? All of these questions are unique to you, which is why this generalized answers that are out there are always wrong. There are many people in the programs who are told, no, keep renting right now because you can save more of a down payment. And when the housing prices begin to correct, you're going to be capitalized on that. Other people, you're told, no, maybe you should have bought 4 months ago when you could get a 10-year mortgage at 1.99%. You also have in the program, this is what the best, beautiful part of the programs have revealed to us, and it was an unintended consequence of the program. The actual member themselves changes while in the program. You actually see it in real time. The difference that the time in the program makes is that your true self comes out in the program. And that often means your final target home doesn't even remotely resemble your initial target home. If you're working with a realtor, the realtor would have taken you out immediately and sold you the target home you started with. But going through the process, all of a sudden you start targeting another home, maybe a different neighborhood, maybe a different town, different city. Maybe your outlook on how big of a mortgage you want has changed. You're given time to structure your home buying decision through the questions that we ask you as you work through the program. And then, on top of that, you have an active management over the process itself. So, from whether you should contact a realtor, which realtor you should contact, should you contact a realtor, how you structure your contracts. People, in Toronto we hear, you have to buy a house unconditional because there's 50 offers. And we say, nonsense, that's crap. That isn't the way you have to do it. You just have to plan in advance so you don't have to do that. You can still get the building inspection done. You can still have the house appraised. If you want an unbiased opinion of a home, this is the only place in Canada where you can get that. You get access to My Viewing, the only automated valuation model that has an algorithm that is totally tailored to the unique member. That's what the difference between a DIY and a program member is. And that is only, you get an opportunity to credit your original dashboard setup fee towards the program. So that drops in. You don't have to double pay. You don't have to double pay. Now, you have to make a decision after you see it uploaded, but you don't have to double pay. Our business model for the wealthy homeowner is built on helping hundreds of thousands of Canadian families. Not on 2, not on 10, not on 100. Hundreds of thousands. Our model is built on building out our advisory staff, getting advisors working across in local neighborhoods across this country, totally replacing the real estate industry if the real estate industry doesn't change. There's certainly no logical sense for someone to be spending $50,000 selling a house today to a listing broker when you can put your home on the market for $299 and get the exact same listing exposure you get with a realtor that you're paying $50,000 for. Makes no sense. Our platform allows those people to access that. So that's what I would end with the service. It's allowed to flow with you over your home ownership journey, but it always keeps you in control of the process. You always have the tools at your disposal to make a rational, unbiased, informed decision. Absolutely the total opposite of how organized real estate has spent the last 40 years trying to program you into doing. And by the way, in terms of the sellers buyers program, the only place in Canada that guarantees you will buy your home for the lowest price possible is the wealthy homeowner. Those ads cannot be found on a Google search. Google search, buy my home for the lowest price possible, and hit images. You will not see one single ad that has been run on that premise in North America for the last 40 years. If you type in the opposite, sell your home for the highest price possible, millions of ads appear. The only place in Canada for home buyers to get the advice they want in North America is the wealthy homeowner.
Ross, who is your home inspector in Ontario?
We never recommend a service provider. We provide the oversight that for those service providers. So that means the type of home inspection that our research, 40 years of knowledge has resulted in, because we were pioneers in that field by particular, Jim. We were the first realtors in Ontario to ever have a home inspection done on a property. That is totally revamped. So we know the loopholes and the flaws in the building inspection model. So we know the building inspection that you're supposed to have. So the building inspector won't be doing it, but we will tell you the questions to ask and what you need to demand in responses from the building and home inspector so that you get the actual information that you need. We've got funny you say that. We right now are formulating our own home inspection model that our members will be able to access when it's completed, that a home inspector will actually complete online. We will never, ever recommend a service provider. We will provide the oversight for our members to be able to demand the service and respect that they deserve from those service providers.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross and he loves to answer them, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.